China's economy is undergoing unprecedented changes not seen in a century. For a country as large as China, national wealth distribution is closely tied to the depth, breadth, and total volume of economic development. In 2016 and 2017, Shantytown redevelopment led the real estate sector to rapidly adopt the three highs model: high debt, high turnover, and high leverage. The real estate sector experienced explosive growth, and local governments became increasingly dependent on land finance. I believe that when analyzing China's economic phenomena, we should start from the fiscal and taxation system. The household sector is increasing leverage, overall macro-level debt in society is also very high, and non-financial businesses are leveraging up as well, causing debt to accumulate and rise rapidly. On the other hand, as economic growth slows down, a scissors gap emerges. The impact of this high leverage and high debt, and the adjustment of balance sheets, a process that could take a long time. As Mr. Gu Xiaoming said, a major balance sheet recession puts considerable pressure on all aspects, which is not a favorable factor for economic development. This broader environment primarily suppresses consumption and creates a crowding out effect, resulting in significant pressure on overall economic growth. Most people expect this process to last 5 to 10 years. Japan's experience offers valuable lessons for China. Studying Japan's monetary and fiscal policies over the past 30 years reveals tremendous fiscal effort. While outside attention focused on the Bank of Japan's quantitative easing, Japan's fiscal policy effectively compensated for insufficient household and corporate investment. Japan's overall GDP has remained at a relatively high level. There has been no economic recession, and although per capita income hasn't increased, it has also stayed at a fairly high level. This year, Japan's economy is strong, entering an environment of rising inflation. The Bank of Japan is considering exiting negative and low interest rates, which is no easy feat for a country mired in recession. Growth has been quite impressive. Japan's transition from a deflationary environment to an inflationary one is considered a relatively successful experience on a global scale, and this kind of governance experience is worth learning from. So, what kind of environment are we facing right now? Real estate, as a main industry, accounts for 15% to 17% of the total economy. However, as the real estate market declines, real estate companies are facing high turnover and high debt, and some companies have even experienced major defaults. At present, there is still no pillar industry that can replace real estate. Consumption isn't achieved overnight. Stimulating domestic demand and establishing internal circulation are medium to long-term goals, with the key being increased per capita disposable income. Not only must per capita income improve, but people's consumption habits also need to change. Whether ordinary people are willing and daring to spend money depends on a series of supporting factors, mainly relying on the improvement of the social security system, the stability of the job market, and the development of market entities. In this sense, economic development is the overriding task. Returning to the fundamental policy of focusing on economic development should be widely promoted. For an economy that has experienced rapid growth for 40 consecutive years, we have become accustomed to a high-growth environment. Suddenly entering a phase of higher quality or lower growth, we find it difficult to adapt. Managers are not used to it, entrepreneurs are not used to it, and ordinary people are not used to it either. In this environment, we are indeed facing the pains of transformation. Right now is the painful period of this transition. At this time, it is even more important to remain calm, to maintain strategic resolve, and to have a clear understanding of ourselves for deep reflection. We need to seek dividends from institutional reforms, from fair competition, from infrastructure, from industrial structure, and from the sustainable growth of per capita income. In the next 20 to 30 years, China's economy will gradually undergo a positive transformation.